Ladies and gentlemen, congrats to everybody that hit the trade of Mullen Automotives. Whether you got in when I made a video when this thing was like $1 and some change, or you got in sooner than that. Regardless, you are up massively. I want to go over how you guys can safely and effectively lock in some of your gains without losing any additional exposure to the upside. A lot of people don't know about this strategy, and I do want to go over it with you guys. As well as that, I want to talk about the gamma squeeze that is currently unfolding with the stock, how high we can go, and how long this will likely last. So thank you guys for tuning in. If you guys find value out of this video, hit that like button and subscribe to the channel, and make sure to get your free stocks links down below in the description. If you sign up with Mumu right now, deposit $1, get 3 free stocks as well as an additional free share of NEO. You can sell those free stocks, which you get immediately, and then go buy yourself Mullen Automotives if that's what you guys want to do with it, or AMC or any other stock. Check that out if you guys have not already. And if you guys want to come trade with us, check the link out pinned down below in the top comment. Now, we are going to go over my position and exactly how I'm essentially trading this. But this is not financial advice. Especially with a very volatile stock like this, nobody knows exactly what is going to happen, but the situation looks very, very good. If we get into the actual Ortex data, you can see that the option flow sentiment for the day, we have 3 orders totaling 189,000, positive order value of 100%. Take a look at these institutional orders that are coming through. They are all bullish. April 14th, 250 calls, $26,000. $1 call for October 21st for 148,000. You guys can see all of these are calls, not one put here. And the put to call ratio is actually only about 20%, a little bit less than 20%. So the situation here looks very good as far as institutional option flows. That's a big thing you want to pay attention to, is what are the institutions doing? And it looks like even though there's a high short interest on Mullen Automotives, the institutional investors by and large are going very long and are very bullish on Mullen right now, especially heading into next week. We do have one of the largest option expiration today that we have ever seen in the history of the stock market. Almost $4 trillion that is locked up in options that will expire today and will be freely available to trade next week. So this could also add a lot of potential buying power to Mullen as well coming next week. So pretty important there. Keep all of that in mind. The short interest is sitting at, it says 3.13%. The actual short interest is over 40%. We've went over that many times here on this channel. That's why you want to subscribe to the channel. But it says the cost to borrow max is 19.04% and the utilization is 100%. This is actually just went up in the last day. So hedge funds, they don't really want to get rid of their stock. They're not really willing to lend out their stock, not even for 19%. That's kind of wild to me. The situation is looking very, very good. Days cover is sitting at 0.23 because the volume is very high. It's not hard for shorts to get out of their short positions, and you're probably not even seeing shorts actually covering today. I don't think that's what it is. If you look at Mullen, I pulled this up about half an hour ago, and you've already seen 3,500 new Mullen posts for the day. So there is a lot of people buying into the stock. A lot of people are very excited, and people have high expectations. They think the stock's going to go to 5, 10, 20, 30, 40. I don't know how high it's going to go. We do have a low float, so it is possible we go to those super high levels, and we've seen crazier things happen, but you want to be safe rather than not. And that's why I do want to go over this strategy with you guys right after we talk about this article, which I will link down below in the description. You guys definitely want to watch this video, but you definitely want to read this article if you have not already. It's pretty long, but it goes over everything that you really need to know revolving around Mullen. Very, very insightful, and I think it'll make you very, very bullish. It says, we'll just read the conclusion here. Conclusion: Mullen knows well how to grow through transactions in the electric vehicle industry. You may like or dislike the deal signed, but at the end of the day, Mullen receives sufficient financing to grow its operation or grow its property and equipment. In my view, if management receives sufficient money to pay interest expenses and the new vehicles are sold, FCF should grow. Shareholders may have to wait a few years to see positive EBITDA, but nobody can say for sure that will not happen. And to even talk about a positive EBITDA for an EV company that is this low, this cheap. I mean, Mullen's total market cap is just weirdly small. It's now sitting at 152 million. This thing was about 25 million when I invested in them, but still, an electric vehicle company with 29,000 pre-orders that are set to be delivered in Q2 and throughout the rest of 2022, that's gotta be low. I mean, 29,000 pre-orders, 29,000 vehicles that are in pre-order that are going to start going out in Q2 2022. You got to give it a higher valuation than 152 million. I think that's pretty logical, and I think that's really the fundamental case, but this article goes over all of that, and we simply don't have time to read this whole article. As you guys can see, it's pretty long, so I will link that down below in the description if you guys do want to take a look at that. But as well as that, the summary, it says Mullen is a successful business story currently investing in scalable electric vehicles and energy solutions. The CEO made special mention of its relationship with Hoffer and compared the deal with that of AMG and Mercedes-Benz. Among the words from the CEO, it is worth noting that he was quite humble when he noted that Mullen is not in any position to compete with Tesla. And yeah, that's obviously a good thing. You want a CEO that is sensible here, that is not talking about competing with a supergiant in the EV field. Investors actually are taking that very, very bullishly. And this article did come out at 2:36 p.m. Yesterday. So definitely give that a look if you are invested in Mullen, whether that is for the long term or here for the short term. Now, I do want to go over this strategy because I think it is the most important thing you'll probably get out of this video, besides the data and the technicals, that we will actually do the technicals first because that's very exciting and the strategy might take a little bit longer to go over with you guys, but it is vital. So we are well above the 50-day moving average. You guys can see this should serve as a lot of support, and that is at $2.29 per share. A lot of support right there. Now we're gassing up. We're about $3.15 per share. But the next level of real resistance we're going to see is up here at $5.17. So if we do start to see an actual short squeeze here, you could see the stock price go well above $5. You could see it go to $5 and then touch this 200-day moving average. That would not surprise me, and that's all the way up here at $7.74 per share. What is also very encouraging to me is that you are actually seeing this rally off of really sporadic volume. Some days it's higher than others, and even today we're seeing a relatively low volume day comparatively to what we have seen, only at 273 million shares that traded hands, but the stock is up 26% today. So when we really do get that over 1 billion for volume day, that's when you're going to see the real move. That's when you're going to see the massive candle that I think is going to come. As far as my position and how you can actually lock in some profits but not limit your upside here, my position is 500 shares, average cost of 70 cents per share, about 3.46% of my portfolio now, market value of $1,500, up about $1,200. I put roughly $350 into it, and it's a gain of about 336% right now. If you guys want access to all of my trades in real time before anybody talked about Mullen Automotives, check that out, link down below in the pinned comment. But nonetheless, if you already have a lot of gains in Mullen, like I know a lot of people do, how do you lock in some of those profits without limiting your potential upside? Well, it's called selling covered calls. So when you sell a call or sell a covered call, you can sell one covered call for every 100 shares that you own. In my case, I own 500 shares. So I can go to the option chain like I did and go to, I like to do July because you're getting decent premium for them. You go to July, the $5 calls, you click sell, and then you sell those $5 calls, do 5 of them, you collect, boom, $625. I spent $350 for these shares, a little bit under that, I do believe. So you effectively collect 100% profit. The best part is you get to sell your stock at $5 per share. If the price of the stock is above $5 per share by July. If the stock price is under $5, you get to keep that $625 premium free and clear. That's it. So your worst case scenario is you have to sell the stock at $5, but you still collect the $600 premium. So you're making a massive amount of money. You're making thousands of dollars. Your best case scenario is if, the price of the stock is under $5, you collect a premium, and then it rallies after your contracts are not valid anymore, right after July. But one of the best things I do like about this as well is even if you are wrong on this, even if you sell this $5 call, but the price of the stock, let's say, goes to $20, you would miss out on a lot of potential gains because you would have to sell your stock at $5. Well, that's not necessarily the case. So when you're looking at this, right, you sold the $5 calls. Well, I sold them for $125. I just did that. So if the price of the stock keeps going up, all of these contracts are going to go through the roof. So all you have to do is basically collect more from a contract, that's further out the money than you collected for the $5. So if you collected $125 for the $5, minus that from the price of those $5 because you'd have to buy them back to get out of this obligation, and that would obviously cost you money. So all you have to do is collect more than what you're buying these back for, or basically the difference between the price of this and what you actually collected for the premium. So hopefully that makes some sense to you guys. And just to make this a little bit more clear, let's say these $5 calls are going for $250 and you wanted to sell out and sell a cover call further down the line. Well, keep in mind you collected $125. So actually you only have to collect $125 per contract from any of these contracts to break even and push your price that you have to sell the stock for up even higher. Hopefully that makes some sense. It's not a very complicated strategy. It's very effective. Just look it up. If I did not do a good job and you still have questions, it's called rolling over a covered call. So that is pretty much going to be all for this video. I think the highest this thing is probably going to go is about $10 per share. I think you'll see a lot of resistance around $5 per share, but you are going to see that big candle up to the upside, in my personal opinion, likely by the end of the day today. But as well as next week, you have $4 trillion of money that will be freely available to trade after today. A huge lockup that is expiring. So that is going to be all for this video. Hit that like button and subscribe to the channel if you guys have not already. Like I said, link to join the trading group down below in the pinned comment, as well as get yourself those free stocks. Links down below in the description. Thank you guys for watching, and I will see you in the next one.